The U.S. Energy Information Administration says domestic gasoline demand is on the decline in 2023 and could fall by 1% in 2024. That is the lowest per capita gas consumption in 2 decades. Yet, under President Biden, who's pushed for investments in clean energy under the IRA, U.S. domestic oil production hit an all-time high earlier this year. So do fossil fuels still have a long-term future, or are they destined to be phased out? Joining us now with more is Yahoo Finance's Rick Newman. So perhaps we start there. Let's address that question further, Rick. And you've been continuing to track this, whether there will be a phase out of fossil fuels.
I think this has been one of the most important lessons of the Biden presidency. If there is a phase out of fossil fuels, it's not going to happen for decades. Two things are going on at the same time here. There is growing adoption of renewable energy, solar, wind, other forms of energy, while at the same time, we still need a lot of fossil fuels. And I mean, it's kind of remarkable when you think that Biden has signed the law for the most lavish set of green energy incentives in U.S. history with the Inflation Reduction Act last year. And yet, U.S. oil production has hit a new record high of 13.2 million barrels of oil per day. And it's probably going to stay there and actually drift a little higher. And that is not happening because of any government incentive. It's happening because there is a market. There is market demand for fossil fuels. So this transition is not happening the way environmentalists want it to, but I think environmentalists just have to be realistic. The way to get this done is to put as much renewable energy onto the market at prices that consumers and businesses can't afford to pay. And Biden's law is actually doing that. He's creating a lot of government incentives that bring the price down. But what you cannot do is deny the fossil fuels that people need today. So just point to that first thing you mentioned there. The EIA is saying there's going to be a decline in demand for gasoline in 2024. One of the reasons for that decline is the sale of electric vehicles. There are more electric vehicles that don't burn gasoline. So that is actually making a dent in demand for fossil fuels. That probably means gasoline prices in 2024 will, I don't know if they're going to plunge. They probably will not plunge because oil prices are going to stay pretty high. But they could moderate and not be a political problem for President Biden. So this transition to green energy is literally going to take decades, like I think 30, 40, or 50 years. It'd be great if it went faster, but this is the reality of the marketplace.
So, Rick, do you think that then kind of points to, because I think a lot of people, when you look at the recent deals that we've seen from the oil giants with Chevron buying Hess, you also have Exxon's $60 billion deal to buy Pioneer, then that kind of supports the reasons for those deals, right? There's still a lot of demand when it comes to fossil fuels. And like you just said, that transition is going to take decades to be done.
Right. Remember, we're talking about global markets here. I mean, and it cannot be another way. You cannot fence off energy and say, we're just going to have a domestic market in the United States. Markets don't work that way. So what these big energy companies are, they're looking around the world. And I mean, look what's happening in China. I mean, China is still burning tons of coal. I mean, we still are struggling with this problem of getting rid of coal. Coal is the worst polluting fossil fuel. If you can replace coal with natural gas, you've done a lot to cut back on emissions. But a lot of the world is still burning coal. And India needs more coal, not less. And this is reflected all throughout I mean, we're not even at peak oil yet. The best estimates are that demand for oil is going to keep going up until at least 2030 or 2035. And then it's not going to plunge. It's going to plateau at a pretty high level. So that's the reason big oil companies are saying they want to lock in what they think are going to be the most profitable drilling fields for the next, again, we're talking 20, 30, 40 years. And we are going to see renewables claiming more market share, but it's just going to be slower than everybody would like. And you do have to think about other places in the world where it's going to take a lot longer than it's taking here in the United States.
Yeah, the disconnect between the developing and the developed world. All right, Rick Newman, great stuff. Thanks so much.
Hi, guys.